Hi guys, this is Wave 618. So just doing a video today on oil. So that's US crude. Alright, here we are. We're just looking at the weekly chart here, and as you can see, I'm not sure how many of you have seen it, but there was a very big inverse head and shoulders pattern here, which we have since come out of, and oil has since been surging since it's come out of that. So it's very exciting times for oil. Certainly not something you would want to miss out on. So first of all, let me just demonstrate this head and shoulders clearly to you. So if we do the left shoulder here, this is the neckline, which is the significant line that we look at to see if it's broken out. This is the head. This is the right-sided neckline, and can you see, as soon as you draw the other side of the neckline, that's when you get this horizontal line forming. After that, you wait for the right shoulder, and then you wait for the right shoulder to break that neckline. Yeah, so it was here that it broke that line, and as you can see, there's a bit of a resistance when it hit that line. There's a red candle there, then it broke the line, and then it never looked back. Yeah, so it's very significant when it broke this head and shoulders pattern. Look how long this had been developing for. So that's since December 2014 all the way through to September 2017. So we're looking at almost 3 years there. Alright, now as we know, this was all consolidation, and after consolidation you get a price surge. The longer the consolidation, the greater the surge will be, because what's generally happening here is the stronger hands are building up their positions, whilst the retail traders, smaller traders, are all selling. Yeah, so whilst the smart traders are buying, retail traders are selling, and all the money is shifted into the hands of the smart money, or the insiders, the bankers, whatever you want to call them, until a point where they decide they want to shift the price up. And that's exactly what's happening now, and trust me, this move is going to be big, purely because this accumulation phase here, I'll discuss more about accumulation phases. It's based on Wyckoff's principles, who was a very well-established trader and teacher of trading back in the day, and people are still applying his principles very much so today. But yeah, in another video I'll explain that one. Alright, so it's broken up from this head and shoulders. Now how about the wave count? So let me just get rid of that one. Alright, so wave count will start here. So the way I've got it is, this is an initial wave 1, and then so that's 5 waves up, and then 2 is a complex pattern. I believe wave 2 ended here, and this is the start of wave 3. So this is the start of wave 3 here. So how do you explain this? Alright, so to me it looks like a running flat. If I label that for you, that's your ABC pattern right there. So you've got wave 1, wave 2, which is an ABC, and then we're in wave 3, which has made 3 waves up so far, just forming wave 4. It's about to form wave 5. I'll come to that in a moment. So let me just explain this ABC, because at the time a lot of people got caught up in this. They didn't know what the hell was happening. They didn't know where price was going. It's a very complex pattern, and you can't make sense of it until price is broken out. It's only looking back you can see, oh look, this was an ABC. But whilst you're caught up in it, you don't know where you are. You're waiting for price to break. You're looking at this as a head and shoulders pattern. You think maybe that's the left shoulder, neckline, head, other neckline, right shoulder, and you're waiting for it to break out. But look at this, it just consolidated for weeks upon end here and never really progressed any further, and then came down to make another right shoulder, and so you have to move your neckline to here. Anyway, you're probably looking at this ABC pattern and asking, are you sure it's an ABC? Alright, let me break it down further. In fact, let's look on the daily chart where it'll be a lot more clearer. Alright, first of all, you've got your wave A. So I made that to have a wave, a 1, 2, 3, 4, 5. The waves are overlapping. I would describe this as a diagonal pattern because the waves are overlapping there. And wave C is also a diagonal made up of 5 waves. So we've got a wave 1, 2, 3, 4, 5. Yeah. So wave A and C are both diagonal patterns. And then wave B, that's even more complex. So we've got an impulsive 5 waves up to make a wave A. So the wave B is made up of an ABC pattern itself. So, and the way I count it is A, B wave is made up of A, B, C, and then that's your C wave. Yeah, so very complex, but that's how I break down this whole ABC pattern. And as I say, you cannot see this whilst price is currently within it. Yeah, it's only looking back on it all and seeing that price has since surged following it that you can see that this was all corrective. It was all accumulation, and you can see that it was an ABC pattern. So it was a terrible time to trade oil during this period. Price was going up and down, up and down. Couldn't really see any obvious patterns developing. We've got diagonals, complex ABCs running flat. Very difficult to trade. Now these Elliott wave patterns, these correction patterns, they are hard to interpret at times. I will do another video just explaining Elliott wave patterns. In particular, these corrective patterns, that's the hardest bit to learn. The impulsive patterns, for example, are with 1, 2, 3, 4, 5 up. It's very easy to see, but it's these corrective patterns that are quite hard to interpret. Alright, so we've got the wave 1. Let me try and just label this for you now. A, B, C, so that's wave 1, wave 2, I believe wave 3 will finish around here. Oops, sorry. Let me just shift across here so we can draw it properly. Alright, so wave 3 probably going to come up to about here. Wave 4 around here, maybe even something like this. And wave 5 I'm predicting, I'll explain why, I predict around $92. That's a very modest estimate, but that's what I'm estimating right now. Okay, so this is the money leg, the wave 3. At the moment, as I say, I think we're in wave 4 of wave 3. Reason being, let's zoom in further. Alright, so I made this to be wave 1. And then wave 3 was massively extended. It's a 4.23 extension of wave 1. I'll just show you that here. So if this is your wave 1, so wave 1, wave 2, wave 3, As you can see, it's the 4.23 extension of wave 1. This is an important figure, 4.236. What I find that if price doesn't find resistance at the 1.618 extension, you're then looking for resistance at the 2.618, and if that doesn't hold, then you are looking for resistance next at the 4.236. These are the most important figures when we look at fib extensions. Again, I'll make another video just explaining why those numbers are the most significant. Alright, now the reason there was a bit of resistance at the 1.618 extension, however, if that was the end of a wave 3, then it would mean that the subcount of the wave 3 would not be validated, purely because I can't see a 1, 2, 3, 4, 5 pattern there. I can see a 1, 2, 3, and then 4 overlaps with 1, so that invalidates the move, and then you've got a wave 5. So because that move is invalidated with wave 4 overlapping 1, I've ignored that 1.618 extension. I believe the move goes much higher. I believe this is a wave 1, 2, 3, 4, 5. So that's the sub count of wave 3 right there. Alright, now after wave 3, we've got wave 4. And if we look at wave 4, so if we start it from the beginning of wave 3 and do a Fibonacci retracement. Okay, let me delete the old fib extension that we had on. That's much clearer now. Alright, so the beginning of wave 3 was here. So that's wave 3 of wave 3 is here. And it's retraced already 38.2%. Now, generally what we see within Elliott wave is an alternation between alternation of complexity between wave 2 and wave 4. As you can see, wave 2 is a very simple zigzag pattern down, and wave 4 at present seems to have just formed a simple zigzag down also. I believe the move is going to be more complex. Wave 4s can often come down to the 50% level, so my stop would be just below here, trading this in a bullish fashion. So what you could find is it may form an A, B, C. So just to document that for you, you may get something like this, an ABC. Having said that, because it has retraced 38.2%, there's nothing to stop it from just surging on from here. As I say, this is a very bullish pattern that's all set up over the last 3 years. Yeah, it may just be hitting these points and just flying off from here. However, I would expect wave 4 to be more complex than this. I wouldn't be surprised if it made another leg down to here. However, you could start building up your bullish position even today. Today being 22nd of February 2018. But don't be surprised if it comes down to this level. This level, if it does come down to it, will act as very good support. If we just look across, we've got some very good horizontal resistance at this level. You can see all the highs finding resistance here. It was at the $55 mark. Yeah, so that's where I believe wave 4 will finish. Let's just take that off. Alright, now the question everyone wants to know is, where is oil going to go ultimately? So let's go back on the daily chart. It's much more clearer to see. Alright, so the way I like to estimate where the price will go, I like to just do a 2.618 extension of wave 1 from the base of wave 1, and that brings us to 92. Once a wave 1 is formed, this is how I create a vague estimate of where 5 will finish. So let me just put a little price label there. So we're looking at 92.70. So as I say, I've drawn a channel. This is connecting the beginning of wave 1 and the beginning of wave 3. Yeah, and then I've drawn a parallel line up from wave 1. This line will act as resistance when it's hit. I believe wave 5 is going to find the resistance, so probably around here. So once this is wave 5 of 3, so yeah, this is the sub count of wave 3 basically. After wave 3 is finished, you'll get a wave 4. It could be quite a quick wave 4 to be honest, because look how complex wave 2 was. Yeah, so wave 4 likely to be a sharp zigzag down, and then you've got wave 5, which I believe will break this. A very modest estimate would be price going to $92, but I would not be surprised if it flew. I'm expecting some news to come out, some black swan event. You know, oil is often the price of oil is often boosted if there's any cause for concern for oil supplies around the world. Sometimes that's created due to war. These kind of things often do promote the price of oil. So yeah, I'm expecting a massive surge in oil. As I say, $92 is the rough estimate, but I believe it could go much higher because wave 5 is often much further extended. Alright, so yeah, that's generally my prediction for oil. And yeah, we'll see how it pans out. But right now, you can start putting on your bullish position. As I say, you can wait for it to come down. Your stop should be below $55. Yeah, but from 55 upwards, I'm extremely bullish. I can't see it dropping below $55. Yeah, so that's oil. I hope it's helped. I will be explaining the trade as it develops. We'll be looking more at this ABC pattern on a shorter time frame. So yeah, we'll be focusing on that. I will be posting more videos. Okay, so please like, subscribe and share my videos. I hope it does help. I will be creating more videos on gold, the S&P index and the US dollar. I've already posted one on Bitcoin. I will be posting more on Bitcoin. I know that's quite a popular market at the moment. So yeah, I hope you've enjoyed it. Take care.